Hello, my name is Jacob Harrelson. I'm chairman of Ross and Yerger Insurance, and we specialize in working with oil and gas contractors on their risk management and insurance programs. And if you're an oilfield service company owner, you've probably been told at renewal more than once, we shopped the market, and yet the results look exactly the same as last year. One option, one carrier, and usually a higher premium. Today, I want to explain why most service companies never actually get competitive insurance bids and why it has little to do with how many brokers you get bids from. Most contractors assume that if they involve more than one agent, they'll get more competition. And that assumption makes sense. But insurance doesn't work like other markets. In reality, competition is limited by a broken system. And most buyers accidentally reduce competition before quoting even begins. Here's the part most contractors never see. Insurance carriers will only accept one submission from a broker. The first agent to submit to the carrier ends up controlling what information the underwriter sees, how your risk is framed and presented, and what assumptions get made about your losses. Once that submission is in, every other agent is locked out of that market. So even if 3 agents tell you they're shopping, the market may already be closed. To make matters worse, studies have shown that 70% of submissions contain wrong or inaccurate information about the insured, and they don't even request all available credits from the carriers. Competition isn't determined by how many agents you call. It's determined by who controls the submission and how it's positioned. Many contractors try to create competition by working with multiple agents at the same time. And what actually happens when you do that is underwriters, they see duplicate submissions, conflicting data between the submissions, and mixed explanations about business operations. And when that happens, they don't sharpen their pencils, they decline to quote. Underwriters avoid confusion, and confusion kills competition. This is why contractors hear things like, no one else would quote, the market is tight, or your operations are not in appetite. Those statements are often true, but not for the reasons contractors are told. They are symptoms of a broken buying process. There are 3 real barriers to competition for most service companies that they never see. First, timing and accuracy. Submissions either go out too early with incomplete information, all in an effort to block the market, or too close to renewal, leaving no time for the underwriter to review. Second, contractual risk. MSAs with lopsided indemnities can drive premiums way higher. And third, poor loss run narratives. Loss runs sent in with no explanations invite worst case assumptions to be made. Insurance competition has to be created in today's environment, as the old method of bidding and quoting has become ineffective. You're probably not getting truly competitive bids if your rates are just increasing each year without being provided alternatives. Your losses don't justify the premiums. If that sounds familiar, the issue isn't effort, it's your process. Fixing this doesn't start with just shopping harder. It starts with running a process so underwriters will say yes. That means clear market and carrier control, assessing and addressing all areas of risk for a service company before the submissions are even sent out for quotes. And that's exactly why we created the Lighthouse, an assessment geared towards obtaining the best possible price instead of just the best available price. You can request your own no obligation, no cost risk assessment to take back control of the insurance buying process and create true competition in the marketplace. Thanks.